Sarah Borkson-Keto. In conjunction with NAREIT's REIT Week 2020 Virtual Investor Conference, I'm joined by video link today with Michael Weil, Chairman, President, and CEO of American Finance Trust. Mike, welcome.
Well, thank you. Thanks for having me. Good morning.
Can you discuss the steps that American Finance Trust has taken to position its portfolio in order to withstand the types of economic disruption that we're seeing today?
Yeah, I think that's a really interesting question because, portfolios are built over time. And I think this is such a severe situation we find ourselves in. If a portfolio from the beginning hasn't been built to withstand this type of unexpected impact, I think you face real problems. American Finance Trust, we've always had a focus on high credit-worthy tenants. A significant amount of the portfolio is occupied by investment grade or implied investment grade rated tenants. These are the critical retail locations. This is where people have to shop, many of which stayed open through the lockdown with either drive-throughs or different pickup services. So, I feel that one of our greatest strengths is that we were positioned for this, even though no one had any idea it was coming. 80% of our top 10 tenants are investment grade or implied investment grade rated, so they've been able to withstand the economic impact. The credit underwriting that we have always followed is really paying off and helping us through what is a tough time. And not only for landlords, it's a tough time for tenants. And more importantly, it's a tough time for humanity. And we're fighting to get through this. And I'm cautiously optimistic that we will see better days.
What sort of transaction activity are you seeing right now? And when do you expect to be involved with acquisitions and dispositions again?
So acquisitions, we are well capitalized. We drew down our credit facility as probably in the middle of March, just because we wanted to make sure that the company continued to be in a very strong capital position from a liquidity standpoint. Acquisitions have been a very strong point of our company's growth over time. We continue to target the same types of tenants and real estate properties, but I believe that there's a coming dislocation. I believe that the historical pricing that we've seen for net lease real estate, cap rates are going to widen. So we have taken a very prudent approach. We're not rushing into acquisitions. We remain active in the market. We are talking to sellers. But right now, I think there's a pretty wide gap in our view between the bid and the ask on these types of transactions. So we would very much be an active buyer, but at our pricing. From a disposition standpoint, we're not very active in the dispositions. We historically are a net buyer. Our portfolio is holding up very well. Occasionally, we will opportunistically have a disposition, a strategic disposition, but really we're not accessing that side of the market very actively. And then, to go back to your first question, I do want to point out, as I said, we did draw down the credit facility. We have a tremendous banking group that we appreciate. They've been very active with us in this last 2-month period, but it really does strengthen our position. We also have a very active and engaged board of directors who I think took some very prudent steps, one of which was to lower the dividend slightly. We did that effective for the April, because AFIN does pay a monthly dividend. So we did lower the dividend. It is now 21 cents per share. And if you look at our first quarter results, which are no reflection of what necessarily future quarters will be, but we feel that the portfolio remains very stable. First quarter AFFO was 23 cents. So we expect to be able to continue to take care of our shareholders' dividends and continue to keep the company in a very strong financial position.
More broadly, how do you expect the coronavirus crisis to impact the demand for real estate across your sector?
Well, our sector is retail. So I believe that critical retail will continue to operate. I believe that certain sectors could find themselves on the wrong side of this. But I don't think the types of things that we've really been focused buyer of, gas and convenience, specialty grocery, even dialysis, because the need for those types of products and services are going to continue through the current crisis. And then as things return to normal, we'll continue to see that. So again, I said earlier, I'm not trying to be too overly optimistic, but I am confident in the quality of the portfolio, the tenant mix, and our ability to continue to find opportunities in this crisis, because I do think crisis does lead to opportunity, and being well capitalized is going to give us opportunities in the future.
Mike, thanks so much for joining me.
Well, thank you very much, and stay safe.
And for more news and analysis on REITs and listed real estate, be sure to visit NAREIT's website, REIT.com.